Welcome back. Today, we are dissecting the nervous system of the wireless world. Every time you make a call, connect to Wi-Fi, or drive a modern car, there is a high probability that a chip from Qorvo, ticker symbol QRVO, is making it happen. We have analyzed the company's financial filings from the 5G boom of 2021, all the way to the most recent quarters of fiscal year 2026, ending in September 2025. This is a story of a company that rode the massive wave of smartphone adoption, crashed into a wall of inventory glut, and is now trying to reinvent itself beyond just being an Apple supplier. Let us begin our journey in the glory days of fiscal year 2021 and 2022. If you look at the 10K from 2021, Qorvo was firing on all cylinders. The world was racing to deploy 5G, and Qorvo's radio frequency, or RF, modules were essential. Revenue in 2021 hit over $4 billion, growing to $4.6 billion in 2022. They were capitalizing on the increasing complexity of phones. A 5G phone needs far more filters, switches, and amplifiers than a 4G phone. And Qorvo, along with Broadcom and Skyworks, controlled this oligopoly. However, even back then, a risk factor was lurking in the fine print. One customer, which we know is Apple, accounted for approximately 30% to 33% of their revenue. While profitable, this dependency meant Qorvo's fate was tied to the iPhone's success. Then came the great inventory correction of 2023. This was a painful year for shareholders. The global economy slowed, inflation spiked, and consumer demand for Android phones, particularly in China, evaporated. Qorvo's revenue in fiscal 2023 dropped sharply to $3.5 billion. The 10K from that year reads like a damage report. They had built too many chips, and their customers had bought too many chips. Factories were underutilized, which crushed their gross margins. The stock price lost significant value as investors questioned if the smartphone growth story was over. Now, let us look at the recovery phase. Fiscal year 2024 and 2025. Management realized they could not rely solely on selling RF chips for handsets. They began a strategic pivot towards two new pillars: high-performance analog and defense. In the 2024 and 2025 filings, we see the fruits of their acquisition strategy. They bought United Silicon Carbide to enter the power management market for electric vehicles and data centers. They acquired Anokiwave to boost their capabilities in beamforming for satellite communications and radar. By the end of fiscal 2025, revenue had stabilized around $3.8 billion. The bleeding had stopped. They streamlined their manufacturing, selling off assembly plants to focus on a hybrid manufacturing model. This was a crucial move to reduce fixed costs and protect margins during downturns. This brings us to the present, fiscal year 2026. We have analyzed the 10Q reports for the first two quarters of fiscal 2026, ending June and September 2025. The data presents a mixed, yet hopeful picture. Revenue for the second quarter of fiscal 2026 came in at roughly $1 billion. What is interesting is the mix of that revenue. The high-performance analog segment is showing resilience, driven by defense and aerospace spending. First, with geopolitical tensions rising globally, Qorvo's advanced radar and communication chips for the defense sector are seeing strong demand. However, the consumer side remains tricky. The advanced cellular group is still fighting a battle for market share. The 10Q indicates that while the flagship smartphone market is holding up, the mass market, the mid-tier phones, is still soft. Management is guiding for a transition year. They are digesting the recent acquisitions and ramping up production for new Apple and Android flagship wins. Financial health remains a strong point for Qorvo. Throughout this entire 5-year rollercoaster, the company has maintained a solid balance sheet. As of September 2025, they hold significant cash reserves and have manageable long-term debt. They have consistently used their cash flow to buy back stock, retiring millions of shares over the last few years. This signals that management believes the stock is undervalued. But we must address the risks. The biggest risk remains customer concentration. In the recent quarters, Apple still accounts for nearly half of their total revenue. If Apple were to ever design its own RF front-end modules, it would be catastrophic for Qorvo. Additionally, the China risk is ever present. A significant portion of their supply chain and revenue is tied to the Chinese ecosystem. Trade wars or export restrictions could severely hamper their recovery. So, what is the verdict? Qorvo, in late 2025, is a different beast than it was in 2021. It is leaner, more diversified, and less reliant on just selling phone chips. The expansion into automotive power management and defense radar provides a new growth engine that is uncorrelated with the iPhone cycle. The stock has been punished for the cyclical downturn, but the fundamentals suggest they have survived the winter. Jet A's AI features get integrated into smartphones, creating a new supercycle for upgrades. Qorvo stands to benefit significantly because AI phones require even faster, more reliable data connections. If you are a long-term investor, Qorvo represents a play on the connectivity of everything, from the phone in your pocket to the radar in your car and the satellite in space. Qorvo is the invisible thread linking them all. Just keep a close eye on those gross margins in the next few quarters. That will be the signal that the turnaround is complete.